In April 2021, at the age of 29, Sam Bankman-Fried appeared on the cover of Forbes magazine with the title, "The World's Richest 29-Year-Old." At the time of the article's release, Sam owned a colossal fortune of up to $22.5 billion. Previously, there was only one other young person who became wealthy so quickly, and that was Mark Zuckerberg. Thanks to the world's third-largest crypto exchange, FTX, the crypto trading fund Alameda Research, and the global crypto craze, Sam was able to become a prominent figure in the cryptocurrency market, attracting millions of participants in the gamble and billions of dollars in investment from all over. However, the image of the white knight of crypto collapsed in early November when his total assets plummeted by more than 90% overnight, and FTX officially filed for bankruptcy. So what happened to Sam and FTX? What turned him from an icon to a pariah in the crypto world? Was this downfall orchestrated by one of Sam's rivals? Currently, Sam is often referred to with unflattering terms by the community. However, if we look back to the time before Bitcoin peaked at $67K in 2021, Sam was certainly an idol for many in the cryptocurrency market. He could be described as a young billionaire who rose from crypto and the youngest person on the list of the 100 richest people in the world. This MIT graduate's journey into crypto began in 2017 during Bitcoin's first impressive growth season. With the experience gained from his role in arbitrage trading of financial products at Jane Street Capital, Sam witnessed Bitcoin's rapid rise in 2017, which made the global cryptocurrency market vibrant. At that time, price discrepancies occurred between Bitcoin exchanges. Noticing that the price of Bitcoin on Japanese exchanges was about 10% higher than in the US, Sam quickly smuggled some Bitcoin to Japan to trade on that market. Perhaps this was when Sam began to realize the potential of the cryptocurrency market in the coming years. If there's anything noteworthy in this part, it's Sam's smuggling action. This indicates that Sam had the mindset of a trader rather than an investor. This will explain the recent events surrounding him. In November 2017, the Alameda Research Trading Fund was officially established. Sam maintained his trader mindset and brought it into Alameda. There were rumors that Alameda was making around $1 million a day at this time through trading. For those involved in the crypto world, if you pay attention to projects featuring Alameda Research, it will not be difficult to notice the trading preference evident in the price charts of these projects. Alameda would often drive the token prices down very low and for a long period, making newcomers to the market and those with weak resolve feel discouraged and sell. After that, Alameda would begin the pumping process, causing the token prices to skyrocket. Alameda, or Sam, was the force behind the success of the Solana ecosystem during the previous price increase phase. Sam did not hesitate to promote the Sol token at the beginning of 2021. By the end of the year, Sam and Alameda had driven the Solana ship to reach $260, multiplying its value 260 times from the $1 bottom and 87 times from the time Sam tweeted. The FTX exchange was founded by Sam in May 2017. At its launch, FTX was labeled as an exchange built by traders for traders. Initially, Sam envisioned FTX would specialize in trading futures contracts. But over time, FTX has become a fully featured crypto exchange with various markets. At this time, FTX showed potential by attracting investment from the world's largest crypto exchange, Binance. The biggest problem FTX faced in its early days was liquidity. An exchange must have sufficient liquidity to attract users. Liquidity is the crucial factor that determines the quality of an exchange. Fortunately, Sam had Alameda as the answer. Sam used Alameda's capital to provide liquidity for the FTX exchange in its early days. This helped FTX grow and become one of the top crypto exchanges in the world after just a few years of operation. On paper, Alameda was the liquidity provider for FTX, but beneath that was another scheme by Sam. On November 6, 2022, CZ, the CEO of Binance, tweeted an announcement that Binance would sell all the FTT tokens they held on the market. These tokens were obtained from their early investment in FTX. Essentially, Binance decided to divest from FTX. This tweet was seen as the opening shot in the battle between Sam and CZ. CZ stated that selling their FTT tokens was a risk management move for Binance, following lessons learned from the Lunaterra incident involving Do Kwon earlier in the year. However, what's noteworthy here is that CZ could have chosen an over-the-counter, OTC route. which involves trading directly without impacting the market. This is a common method used by funds and projects to divest investments without affecting market prices. Yet CZ opted for a different, easier, and more painful route, selling FTT tokens directly on the market. At this point, it's clear that things are not as straightforward as they seem. Sam's drama actually began a few years earlier. From November 2018 to January 2019, Alameda raised funds from investors with promises of high returns and no risk. In July-August 2019, FTX was founded and raised $8 million in seed funding, marking the second milestone in a company's fundraising journey. Now, many people have begun to question Sam's intentions. Specifically, how would he prioritize his interests in these two projects, especially given his background as a trader? Also, during this time, some conspiracy theories have emerged regarding the true purpose of the FTX exchange. As Alameda's direct fundraising efforts were becoming challenging, FTX, disguised as a trading platform, could serve as a safe haven for users to hold assets. It's important to note that Alameda still played a crucial role as the primary liquidity provider for FTX, meaning Alameda was closely tied to FTX's funding. Could Alameda have been tempted to withdraw user funds to engage in profit-making trades? By mid-September of that year, CZ announced that Binance's futures platform had been attacked, targeting the liquidation of user contracts. After investigation, the attacker was traced back to another smaller futures trading platform. Though not explicitly named, everyone understood it was Sam. It's worth noting that Binance's position at the time was not as dominant as it is today. Perhaps Sam early on realized that Binance would become a major competitor to his futures contract platform in the future. Therefore, Sam decided to eliminate his opponent from this point onward by disrupting the charts. Typically, crypto exchanges are required to have trading charts for spot trading, where buying and selling occur similarly across platforms. However, the charts for trading futures contracts across exchanges can be significantly different. If Binance Futures were to engage in a massive sell-off, many user contracts would undoubtedly be liquidated. Naturally, CZ would bear responsibility for this. It's quite possible that this was Sam's main objective, to ultimately lure users away from Binance to FTX. But FTX alone wasn't enough for Sam and Alameda Research. Sam began to wield another dark power: leverage. Amid what was known as DeFi Summer in 2020, Sam and his associates created Serum, a decentralized exchange built on the Solana blockchain. On paper, FTX and Alameda were partners in this exchange. However, some sources suggest that Sam's people were actually behind its development. The presence of Serum itself was secondary. What Sam aimed for was the Serum token, SRM. Sam tried to push the SRM token out as early as possible, but with a small circulating supply, most SRM tokens remained locked up. At this point, the question that ordinary people like us need to ask is, why did Sam do this? With a small circulating supply, the token's price can be easily manipulated. This can drive the price of SRM up significantly with only a small amount of capital invested, attracting speculative investors who then provide liquidity. The locked-up token value in Sam's hands could be inflated hundreds of times beyond its actual value. This tactic isn't limited to Serum. Alameda or Sam applies similar strategies to many other projects on Solana. As a result, Alameda Research has a beautifully balanced balance sheet, which can be leveraged for additional borrowing. Indeed, it's a genius strategy. However, the assets Alameda used as collateral were inflated bubbles. Coupled with excessive leverage and large-scale pledging, when the market declined, Alameda had to steal money from FTX users to save itself from being liquidated due to collateral defaults. Essentially, they're robbing Peter to pay Paul, and this is also when the countdown on the ticking bomb is nearing its end. As of now, we have some figures indicating that FTX is carrying at least $3 billion in debt, according to the company's bankruptcy filing, with at least $1 billion of that being funds from users held on the platform. Additionally, Sam's net worth has plummeted to zero as FTX filed for Chapter 11 bankruptcy under U.S. bankruptcy law. During this period, FTX is still allowed to operate to manage the remaining turmoil it has caused. Internet users often compare FTX to the scandals of energy giants like Enron in the early 2000s. At another time, if you're interested, I could try to create a concise, understandable video. The common denominator between both cases is deceit in their financial reporting. Recently, they also share another similarity. FTX new CEO, John J. Ray III, who has dealt with the aftermath of Enron, has been appointed to clean up the mess left by Sam. After investigation, John stated that throughout his career, he has never witnessed such complete operational failure and total absence of reliable financial information as seen here. So, how did Sam cover up this scandal? When Sam, Alameda, or FTX rapidly rose to prominence in such a short time, many questioned Sam's sophistication. However, these doubts were in the minority. Sam knows how to handle public relations, promote, and increase user trust in FTX or Alameda through various clever maneuvers. First, FTX renamed the home of the Miami Heat basketball team to FTX Arena. Next, Sam became the second largest supporter of President Joe Biden's election campaign. Moreover, he even expressed interest in participating in Elon Musk's bid to buy Twitter. However, Elon Musk had doubts about Sam's wallet. In early 2022, FTX continued its Series C funding round with $400 million to raise the company's valuation to around $32 billion. To bolster this, Sam consistently voiced support for the regulatory framework for crypto. If you're wondering how and why Sam can be so outspoken on legal and political matters, here's the answer. Sam's background is far from ordinary. His family has close ties to the political and bureaucratic circles of the United States. Sam's mother, Barbara Fried, is a professor at Stanford University and an active member in the Democratic Party's electoral process. Sam's father, Joseph Bankman, also a professor at Stanford, works at the IRS, specializing in tax policy for the U.S. Treasury Department. Caroline, CEO of Alameda, shares a similarly prestigious background. Her father, Glenn Ellison, is the head of the economics department at MIT, and by chance, the chairman of the SEC, the U.S. Securities and Exchange Commission, is also a professor in the economics department at MIT. Additionally, FTX and Goldman Sachs have established certain connections as both have supported each other in constructing a legal framework for the crypto market. Perhaps it is through this facade that Sam managed to sustain himself until recently, until exposed by CZ. FTX headquarters are located in Nassau, Bahamas, an island nation in the Caribbean Sea. This is also where Sam and his associates are based. At the time of FTX collapse, only God knows exactly where Sam is, although he continues to tweet and receive harsh criticism from crypto players. We can look back at Do Kwon. Despite being on Interpol's internationally wanted list, he still live streams on Twitter and laughs. Could Sam become a similar case? However, it didn't take long to wait. On December 13, 2022, the U.S. Department of Justice, DOJ, announced that Sam Bankman-Fried, the founder of the FTX exchange, had been arrested in the Bahamas on criminal charges. This marked the end for the former crypto billionaire and his cryptocurrency empire that went bankrupt. After 5 court sessions, Sam faced a possible prison sentence of up to 110 years. The key witness in the trial, also Sam's girlfriend and former colleague, Caroline Ellison, admitted they had stolen about $14 billion from FTX customers. And finally, on March 28, 2024, the official verdict for Sam was announced. It's a sentence of 25 years in prison, significantly less than what prosecutors sought, but enough to completely ruin a lifetime. Lastly, let's work with enthusiasm, but never overlook professional ethics. Money is important, but it's not everything we need for a beautiful life. I've seen happy smiles in slums and also witnessed the wealthy in agony. Always remember, money is important but not everything. Goodbye everyone, see you in the next videos. Peace.